Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. The Philippine Economic Zone Authority is making strategic moves to attract global investors, boost key industries, and enhance investor services. With billions in new investments already recorded this year, the momentum is strong. But what's next for PEZA, and how will these initiatives shape the country's economic landscape? Joining us today is PEZA Director-General Tereso Panga to break down the latest developments. DG Panga, Teo, thank you so much for joining us today. We appreciate it.
Good morning. Thank you very much, Ms. Raine, for having us in your program.
Welcome to Follow the Money. Of course, the latest news, 30 billion pesos in investment surge in January. What might be driving it?
Well, essentially, we attribute our increase in Ecozone investments to the overall and strong performance of the Philippine economy last year, like our high GDP growth rate, which make us second fastest growing economy in the region, our high Purchasing Managers Index, which is #1 in ASEAN, indicating an expansion mode rather than contraction, as what is being experienced now by other economies. And another upside for PEZA is the fairly strong growth achieved by our two leading sectors, which are electronics and semiconductors and IT BPM. And so with that, we are confident that we can attract more investments into the country, especially as we leverage the Create More law, which now provides for the most generous fiscal incentives for investors across ASEAN.
How competitive is the Philippines right now in terms of offerings to the locators?
Well, on fiscal incentives, definitely I would say we have the best package that we can offer to investors. With the Create More, we added 10 more years to already 17 years long of running ITH and special corporate income tax. That's a lot longer than the 5 to 15 years being offered by other ASEAN economies. And for those that will be investing with ticket investments, these are your $1 billion or 40 billion investments, the president is even authorized to grant a longer incentive period and a mix of other incentives as well as non-fiscal incentives that can be offered to investors.
Foreign investor confidence, what makes the Philippines attractive right now? Of course, this surge in investment suggests strong confidence in the Philippines as an investment destination. Are there key factors making foreign investors choose the Philippines over competing markets in the region? You mentioned financial incentives.
Well, yes. Other than fiscal incentives, I'm sure government has done a lot of fiscal and economic reforms. We've seen our credit rating increasing also, better than what Vietnam in terms of credit rating. And we are getting more investments in PEZA. Last year was our 7-year high in Ecozone investments. It's a steep ascent for our Ecozone investments. And so we don't want to pass up on this opportunity as we expect more investments relocating, especially from China, because of the new Trump policy on trade, where some of the countries with huge trade deficit with the U.S. will be imposed higher tariffs on their exports to the U.S.
Right. Do you feel that investments might be coming down because of those Trump tariffs?
Well, we see it as more of a opportunity for the Philippines. I would say it's even a windfall for the Philippines because right now we talk about competition for manufacturing FDI with that of Vietnam, even Mexico and China. And so definitely companies that are operating in these economies, because they'll be unable to export to the U.S. Because of the high tariff rates, will look for an alternative, cost-effective destination. And this is why we are positioning the Philippines to be their alternative location for exports to the U.S. and even to EU.
We were just talking with SAPI a few days back, and they were really looking at new incentives for semiconductor and electronics firms. PEZA is working on to attract or to provide new incentives to attract semiconductor and electronics manufacturers. They're looking at tapping TSMC and others. What can these firms expect, and how do these incentives compare to what other ASEAN countries are offering? You were already mentioning the likes of Vietnam.
Well, SAPI's reaching out to TSMC is the right direction for the Philippine EMS SMS industry. I think they can help us a lot in terms of increasing investments, moving up the value chain, because what we lack in the Philippines is, for example, wafer fabrication, those into wafer equipment. And so if you're able to bring in their tier one suppliers to the Philippines, that might just pave the way for the entry of wafer fabrication in the Philippines. And on the incentives, the president was quoted recently saying that there must be specific incentives to be given to electronics, being our biggest exports. I think that is doable, and we support that. This can be likened to the CARS program, which government initiated to be able to attract investments into the automotive sector. And so we want to do the same for electronics. Although I would say we can do that within the framework of the Create More law, so that instead of just granting tier one incentives to EMS, we can outright grant tier three because of the very nature of their high-tech, high-value, high-profit products. And so with that, we can be more competitive with the fiscal incentives that we can grant to our EMS, SMS investors in particular.
DG Panga, is it, tier three immediately grants them how much in incentives? Does it include, does it include power discounts?
Well, on tier three, it's the longest ITH period that we can grant to investors for 7 years versus the initial 4 years for tier one investments. And in the Create law, there is a provision saying that for big ticket investments, these are your 50 billion pesos to be exact, and $1 billion and above, the president is authorized to grant a mix of incentives, and this will include power subsidy for really eligible big ticket investments. Otherwise, there is also a provision in the Create More which allows for 100%, as much as 100% deduction on power expenses by locator companies or RBEs under the enhanced deduction regime.
Some industry stakeholders were saying that the Philippines may have missed the boat when it comes to data centers. Would you say that that was true? Or is there an opportunity for more data centers to locate here in the Philippines? Plus, where would they be coming from?
Well, as we speak, we are in talks with big ticket investors into data centers. And I think we have a strong chance in getting these investments into the Philippines, for one. So we have the generous fiscal incentive. Second, on the issue about high cost of power in the Philippines, actually in PEZA, in the economic zones, we have debunked that common misimpression by many, because what they show before the media and in the international fora are rates that are prevailing outside the economic zones. Inside the zones, it's a lot lower rate because we follow the distributed energy system. So what we mean by that is that because we're able to attract investors putting up embedded utilities, power, water, even telecom, so definitely this is a lot lower. In terms of power rate, it's devoid of transmission charges. And so our 8 cents to 12 cents per kilowatt hour can approximate the subsidized power rates across ASEAN. So we can be competitive in attracting even data center and hyperscaler investors.
Certainly sounds good. Of course, U.S. chip makers and the global semiconductor competition with the U.S. prioritizing semiconductor investments worldwide. PEZA is actively courting major chip manufacturers. Have there been significant breakthroughs in these discussions? And how does PEZA position the Philippines in this competitive space? How much more in investments are we expecting for the rest of the year?
Well, on EMS, SMS, so we've been most aggressive in attracting these investors. We were recently in the US to participate in the Consumer Electronics Show, where we showcased our 8 locator companies with their high-tech products, which have the potentials to make it big in the global market. We made a pitch before World Electronics Forum. IPC, which is one of the biggest electronics industry associations in the US, have reached out to us, offering partnership to provide training for our workers, capacitate our industry, including FDI networking. So I would say we're now getting the attention of the global industry players in the EMS, SMS. We had the chance to even visit tech giants like NVIDIA, Tesla, Enphase, Advanced Materials. And so we were able to generate some leads out of this mission. In PEZA, electronics happens to be our bread and butter, providing for our biggest source of investments at 34% and exports at 60%. And so we hope to sustain this growth momentum. Towards the end of the year, we hope to achieve 250 billion pesos in annual investments. And if we're able to do that, this will bring us back to the heydays of PEZA when we were doing 250 to 200 billion pesos in annual investments in 2012 to 2015.
Do you mind if I ask what had slowed down PEZA in recent years?
Well, if I may refer to our investments, where we have had declining investments in the previous administration. But when the new president assumed into office, President Marcos Jr., even coming from COVID pandemic, we were able to quickly recover already, bringing us back to our pre-pandemic levels. 2024 was even a banner year for PEZA. In January, start of the year, where we registered already some 30 billion pesos in investments. Although the big source of investments for January came from beverage manufacturing, and which is good because we want to diversify our mix of products to make our growth resilient.
Now, if you don't mind me shifting gears, you already mentioned Tesla. There's a partnership that you have with South Korean EV assemblers, and you recently signed a deal. What are the details of this partnership, and how does it align with the country's push for greener industries?
Well, it's the DTI that is on top of the industry development together with the BOI. So they have this partnership with the EV manufacturing. We're coming in to offer the economic zones as viable locations, as we can provide for the best location and business ecosystem. And we're hopeful that with the ratification of the Philippine-Korea Free Trade Agreement, this will now signal the entry of more Korean investments into the Philippines, particularly those into EV manufacturing, SDG, and green-related investments.
Would it really be cheaper to manufacture from here in the Philippines for these Korean manufacturers?
Well, the idea of inviting them to locate in the Philippines is really more to cater to the domestic market because, as you know, we are modernizing our public transport. There's a new law that will provide the incentives to those that will migrate to EVs. And so EV manufacturing is very much welcome. Other than catering to our public utilities and even those private sector wanting to transition to EVs, we're offering the Philippines to be their hub to not just to Asia Pacific, but especially those that will export to the US and EU, where the Philippines is the only economy among ASEAN that enjoys GSP Plus or zero import duties for our exports to the EU market.
Understood. DG, apparently we still have to take a break for a quick commercial, but stay with us. Up next, what's PEZA doing to future-proof the Philippines' role in the global supply chain? Stay with us on BNC and follow the money. Welcome back to Follow the Money. We're still with PEZA Director-General Panga. Director General, fast-tracking investment leads from strategic markets beyond the U.S. and South Korea. What other countries or industries are on PEZA's radar for new investments? Are there other new incentives or policies in the pipeline to fast-track these deals?
Well, we're looking at non-traditional sources of FDI and trade, like we're reaching out to our partners in Australia through the Australian Chamber of Commerce because of our accession to RCEP. So we now see increasing investments coming from Australia. We're watching out closely the developments in the Middle East, where there's also a plan to do the same, entering into free trade agreement. Other than that, our best bets for the year are those coming from Taiwan and even those coming from China, because we expect that many companies will be relocating, shifting production out of China. So we will be most aggressive in reaching out to these economies. Of course, US tops the list because of the CHIPS Act and the ITSI funds, where already some American companies were able to get funding. And so this will encourage more investors to locate in the Philippines, to support the EMS supply chain, support us with infrastructure development, digital transformation, including renewable energy development. And of course, we cannot set aside our biggest source of FDI consistently over the years, which is Japan. So we will continue to reach out to them, Japanese being our biggest source of investments. And we now see even more Japanese coming in the EMS, particularly those in the MLCC or multi-layer ceramic capacitor. Do you know that we host 4 of the biggest global industry players in this segment, including the silicon carbide, or what they call SiC solutions, where we have also some of the global industry players already operating in the Philippines, and as well as those into assembly, packaging, and test.
Well, hopefully all those come into fruition. What kind of timing are you looking at?
Well, it's something urgent to us. As I've been saying, we cannot pass up on this opportunity. We now get investments coming from China because of those multinational corporations relocating in the Philippines. So this is urgent to us. In fact, on first week of March, we will be going to Japan for another investment mission, where we hope to interact with some of the tech giants in Japan, leading industry players, so we can attract them, including the SMEs in Japan.
DG, we're down to our last 2 questions and perhaps last 2 minutes as well. Attaining sustainable economic zones, that seems to still be a priority for the UNDP. This partnership you recently signed with the UNDP to enhance sustainable development in eco zones. What kind of concrete steps are being taken to integrate ESG standards into these zones, or is that under question right now under the new Trump administration?
Well, our partnership is with UNDP. So understandably, for those projects under USAID, so we're setting it aside for now. But for UNDP, including our collaboration with EU, we are promoting what we call the Eco-Industrial Development Framework for all economic zones, so that they can be low carbon, energy efficient, follows the circularity economy. And we're partnering with the EU on sustainable development goals. And this is where we can develop also strength in terms of attracting SDG and ESG related investments. And from our experience, investors that come to meet with us would ask us about our readiness, because they want to see the clean and green production agenda. And this can be a source of competitiveness for any multinational corporation locating in the Philippines as their destination and facility for manufacturing.
Director General, what kind of projects have been affected by the pause in USAID?
Well, we were doing this project with USAID on preparing the workforce for advanced manufacturing, together with SAPI as the lead. However, it was already in the tail end, so There's also the city development initiative with UP. This might be put on hold because of the recent decision by the U.S. government.
Understood. Well, hopefully those things still find its end, find its closure. And now for our last question, and thank you so much for opting to participate. We have a special segment. We'd like to ask our guest a personal, off-the-cuff, and real-life follow the money question. DG Panga, Teo, we know you're smart with your money, but let's be honest, everyone's got that one indulgence they cannot say no to. So our question for you is, what's the one thing you don't mind splurging on, no matter the cost? And why does it matter to you?
Well, I would say not really splurging on, but rather investing wisely. I invest in good musical instruments like keyboard and guitar and audiophile system. This keep me company and homebound. This is what I enjoy doing most at home and with friends, jamming with my bandmates. These are actually my stress busters.
Well, I mean, when it comes to stress and relaxation and getting you back on your feet for the next challenging week ahead, that's something that we can definitely bank on. If you like this question and episode, you want to join the conversation or answer the question, share them with us on social media, X, Facebook, and YouTube. Hashtag #FollowTheMoneyBNC. We shall post some of those answers. On our next episode, Director-General Tereso O. Panga, thank you so much for giving us an in-depth look at PEZA's latest initiatives. Your agency is driving investments, improving investor services, and ensuring a globally competitive workforce, shaping the future of the Philippine economy. Thank you so much. We'll be keeping a close watch on these exciting developments. We appreciate you. And before we go, we leave you with this thought from Harley-Davidson CEO Jochen Zeitz. Sustainability is no longer about doing less harm. It's about doing more good. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News channel. Always on time.